Real investment trust, also known as REITs, are companies that own real estate across a range of property sectors. REITs are tax-exempt vehicles, generate consistent cash flow, and pay elevated dividends that keep on growing. Investing in REITs allows you to own real estate without having to manage anything on your own and diversify in multiple sectors without having to actually buy a property. Hi, welcome to The Holder Investor, and in this video, I will talk about REITs and how they can generate passive income for you. REITs buy or build properties, rent them, and distribute the rent to the shareholders. Imagine I own some stores and want money to invest to grow my business. I can sell my store properties to a REIT and lease it back. This benefits my business and the REIT, as now I have money to invest in my stores, and the REIT has the properties that will generate income. This is known as a sale and leaseback, and it is a very common practice between some REITs. REITs are tax-exempt vehicles, so to be classified as a REIT, the company must have some requirements like invest at least 75% of its total assets in real estate, derive at least 75% of its gross income from real estate operation, and pay at least 90% of its taxable income in the form of dividends each year. This makes REITs a good option for passive income. Why invest in REITs? I am going to list the top 6 reasons to invest in REITs. First, diversification. REITs are diversified across multiple sectors like residential, retail, industrial, data center, healthcare, and office. They are also diversified within the sector. For example, Avalon Bay, an apartment REIT, has more than 85,000 homes in their portfolio. Realty Income, a retail REIT, has over 6,700 commercial properties leased to 630 different clients operating across 58 industries and located in 50 states. Second, you don't need to manage anything on your own. If you buy a house to rent, you will need to manage everything, deal with the tenants, do regular maintenance, big repairs, collect rent, and other things that you don't need to worry about when you invest in REITs. Third, from 1989 to 2020, REITs have outperformed stocks and bonds. The all-equity REITs index returned 2,542% in this period, comparing with 2,386% of the S&P 500 index. This is interesting because some people tend to think that REITs do not grow a lot, but looking at the data, we can see that they outperformed the S&P 500 in this period. Fourth, dividend growth. A lot of REITs increase their dividends over time. For example, the Realty Income increased their dividends for 26 consecutive years. This makes Realty Income a dividend aristocrat that are companies that have consistently increased their dividends every year to its investors for the last 25 years. Fifth, REITs provide natural protection against inflation. Real estate rents and values tend to increase when prices do. This supports REIT dividend growth and provides a reliable stream of income even during inflationary periods. Sixth, REITs have a low correlation with the S&P 500. This means that when stocks are not performing well, REITs may be having a good performance and vice versa. So this can bring diversification to your portfolio. Something to be aware of REITs is that most of them have high debt. As they distribute 90% of their net income, they need to take debt or issue shares in order to finance new growth projects or expand their business. Issue shares mean that there will be new shares in the market and you will be diluted. This is not necessarily a problem because most of their debts have a low interest rate and they can use the money to grow and generate value. As some REITs issue shares, it is important to follow if the earning per share or funds from operations per share are growing over time to check if you are not being diluted. Depreciation is when the monetary value of an asset decreases over time. This decrease is subtracted from the taxable income but has no cash effect, so the company can use this money to invest. This is another way for REITs to grow. Let's look into some REIT sectors. Residential. They own and manage various forms of residences. Residential REITs include REITs that specialize in apartment buildings, student housing, manufactured homes, and single-family homes. Within those market segments, some residential REITs also focus on specific geographical markets or classes of properties. Industrial. They own and manage industrial facilities. Some industrial REITs focus on specific types of properties such as warehouses and distribution centers. Industrial REITs play an important part in e-commerce and are helping to meet the rapid delivery demand. Data centers. They own and manage facilities that customers use to safely store data. Data center REITs offer a range of products and services to help keep servers and data safe, including providing uninterruptible power supplies, air-cooled chillers, and physical security. Office. They own and manage office real estate. Those properties can range from skyscrapers to office parks. Some office REITs focus on specific types of markets, such as central business districts or suburban areas. Some emphasize specific classes of tenants, such as government agencies or biotech firms. Retail. They own and manage retail real estate. Retail REITs include REITs that focus on large regional malls, outlet centers, grocery-anchored shopping centers, and power centers that feature big box retailers. Net lease REITs own freestanding properties and structure their leases so that tenants pay both rent and the majority of operating expenses for a property. Healthcare. They own and manage a variety of healthcare-related real estate. Healthcare REITs property types include senior living facilities, hospitals, medical office buildings, and skilled nursing facilities. So, overall, REITs are a viable alternative to investment properties for investors who want to create wealth by capitalizing on the real estate sector without all the hassles that come from owning, developing, and managing a portfolio of investment properties yourself. Thank you so much for your time. I really appreciate it. I'm starting this channel, and if you enjoy this video, please click on the like button. This will help me a lot. If you want to receive the next videos, subscribe to this channel and activate the notifications. See you next time.